Whether you're investing or not, news of the Korean markets have probably reached your ears at some point this year, as the KOSPI and the Kosdaq have seen a massive surge in retail investment over the course of the pandemic. Now, if you're interested in a general description of the Korean markets, click on the link in the top right corner and watch the first video I did on this topic. But if you've already seen it or don't really care to watch, then stay tuned because we're getting a bit more in depth today. You're watching Sekkider, and this is a closer look at Korea's capital markets. Now, before I keep going, I would appreciate it if you could subscribe to the channel and maybe share it around a little bit to help me gain some more traction. If you're not currently investing in the markets right now but you want to, click the link in the top right corner for a quick explanation on how you can open up an investing account in the Republic of Korea. Now let's dig in. Within the Korean exchange, there are three different market divisions. You got the Kosdaq, the KOSPI, and the derivatives market. Today I'm going to break down the differences and consider the implications for investors trying to get into the market for the first time. So let's start with the OG, the matriarch, the Korean Composite Stock Price Index, aka the KOSPI. In short, the KOSPI is Korea's representative market and it's home to hundreds of companies, whether small, medium, or large cap. In bare English, that just means that the index includes companies of all sizes. It is, therefore, considered the benchmark Korean market and the best measurement of the Korean economy's performance at a given point in time. Now, it's important to note that the stock market performance and an overall economy is not inherently representative of one another, but with the size of the KOSPI and the sheer number of companies within, the performance of the companies and the diversity of companies there within provided the best look at how well the nation's publicly traded firms are performing in a general sense. Now, the second market of interest within the Korean exchange is the Kosdaq. The Kosdaq is also a large index that was initially intended to feature businesses within the infotech, biotech, and culture tech industries as well as venture startups. It's often compared to the Nasdaq as it's similar in theme, but there is an important and distinct difference between the two that sets them very far apart. See, while the Nasdaq is an electronic exchange focusing on similar themes, it contains some of the largest companies within the United States, and I'm talking large like Apple, Microsoft, Comcast, Netflix, Google, the big ones. Comparatively, the Kosdaq tends to focus on SMEs, or small and medium-sized enterprises. While the Nasdaq is really a giant, the Kosdaq is more of a secondary market when compared to its brother, the KOSPI. Industry giants like Celltrion, Kakao, and Naver, at that time NHN, are examples of companies that listed on the Kosdaq initially, but then later moved on to a larger exchange after immense growth. Thus, the Kosdaq is seen as more volatile when compared to the KOSPI or the Nasdaq, as it lacks the support of the massive firms that can be found on those larger markets. The Korean exchange's third market is that of derivatives. Derivatives and futures are lucrative contracts that can be tied either directly to stocks, commodities, currencies, or to overall indexes as opposed to purchasing the equities or assets directly. I'm not going to go too in depth with this right now, but if you want indirect exposure to these risky but lucrative assets without doing the research required to actually buy shorts and futures, look for the category 파생형 when signing up for a fund, and then go with that. But now to the important stuff. What does this mean for you? Well, as previously noted, the Kosdaq and the KOSPI can be considered junior and senior, the show and the minors. This is not to say that the KOSPI would be a superior investment though. For example, when looking at it from a 10-year perspective, the Kosdaq actually outperformed the KOSPI, but it's also seen two of its largest firms, Kakao and Celltrion, transfer out within that time. The Kosdaq is seen as being more volatile than the KOSPI, which is the home market for most of Korea's largest firms. But being focused on venture startups and SMEs, the Kosdaq may also provide more potential for bigger gains in the short term. To get a better understanding of the two markets and their differences, it's helpful to look at the listing standards and requirements needed to satisfy the regulatory board for both indices if a company wants to list. Now let's start with their commonalities. There are three qualitative considerations that both markets make when considering new listings. They are: A. Company continuity. This refers to things like their stability as a business, their growth prospects, and their ability to survive things like major lawsuits. Then you have B, the management's transparency. This is including but not limited to the structure of their corporate governance, their internal control systems, and their transparency in accounting. Then you have C, which is investor protection. And this includes factors such as their liquidity situation, small shareholder protections, transparency in disclosures, and professional expertise of their underwriters. Their main differences arise in their quantitative considerations, so I'm gonna list a few of the key ones here. While the KOSPI requires 30 billion won of shareholder equity and 1 million shares to list, the Kosdaq only requires a market cap of 9 billion won and 3, 1.5, and 1 billion won in shareholder equity for their listings depending on the type. To qualify for the KOSPI, every company needs to have at least 3 years of operating history. But this is not the same for the Kosdaq, which only requires 3 years for general companies and no history for qualified venture companies or growth potential companies. And these are official classifications. This is not just like a random naming or selection by the firm itself. Another difference is that shareholders of newly listed equities must endure a 6-month long lockup for the KOSPI and 6 months for the Kosdaq if it's a standard company. But for those special classifications, the qualified venture companies or growth potential companies, the lockups last for a whole year. Finally, there are fewer financial requirements for the Kosdaq when compared to the KOSPI, which should be expected when considering the aims of both markets. I won't bore you with the numbers themselves, but they have to do with the statistics such as return on equity, market cap, sales, and net income. If you actually want to look into the info more deeply, I'll drop a link to the Korean Exchange listing guide in the description box below. And now I can feel some of you staring slack-jawed at the screen right now, so let's actually talk about what that means for you. Unless you're actually buying an index fund, it really shouldn't matter which market the company you're looking at is in. As we've seen, high-performing firms still have mobility. So small and medium-sized companies always have the option to relist if they think it would be beneficial. At the end of the day, as an investor, you still have to do your research, look at the financials, read the annual reports, and do your due diligence before investing into a company for the long term. If you are buying into some index funds, it would benefit you to think about what your goals are and what vehicles you think will provide you a higher return in the future. It may also be in your interest to know that there's a third market called the Connex, which is a subdivision of the Kosdaq and functions as an even more junior market and divestiture vehicle for venture capitalists. But there are only currently 3 funds that aim to track the Connex, and its performance has been relatively muted since its inception. Might be worth the extra effort to keep an eye on it just in case it ever makes it out of the dirt. Okay, that was a lot, so I'm gonna let you sit with that one for a minute. If you found this video informative, I'd appreciate it if you could share it with your friends, family, and neighbors. Nah, I'm playing. It's 2020. Nobody talks to their neighbors anymore. To everyone who followed me from Reddit, I appreciate the love. For real, I thought I was gonna get people ripping my throat out, but y'all were so nice, and I really hope that I could bring value to you and yours as we build on this project for the future. Also, big ups to Hangang Magazine. Swing by the link down below and see the work that they're doing over there. Let's build, family.